As expected and discussed in a last month's video, the Bank of Canada raised interest rates another 50 basis points in October. Markets were pricing in a 75 basis point rate hike, but the Bank of Canada failed to deliver, citing growing concerns around financial stability. It's the first time in a while that they've flagged financial stability concerns, which suggests we're likely near the end of this rate hiking cycle. Still, the damage is already done. Prime rate now sits at 5.95, meaning nearly all variable rate mortgages are now north of 5.5 and closing in on 6% when we get our next and perhaps final rate hike in December. Short-term fixed rates are now north of 6% in many cases, particularly for renewals where borrowers have less flexibility in changing lenders. Just for curiosity's sake, I called one of the big banks the other day to inquire about converting a variable rate mortgage to a 2-year fixed rate mortgage, and I was quoted 6.14%. This was the best they could offer. Suffice to say, mortgage rates north of 6% are hard to stomach and the market is not digesting it well at all. Greater Vancouver home sales for the month of October totaled just over 1,900 sales. It was the lowest count since October of 2008. In other words, home sales haven't been this weak since a month after the Lehman Brothers collapse in 2008. Now this might be a bit dramatic, but the reality is that the population has grown a lot since 2008 and so has the total housing stock. Sales volumes at these levels are definitely concerning. Following a similar trend over the past several months, both buyers and sellers are on strike. New listings are running 8% below their long-term 20-year average. Despite sales running at or near multi-decade lows since the summer, active inventory for sale has hardly grown at all. Inventory for sale is half of what it was in October of 2008. There is simply no panic showing up on the inventory side. However, this could change sometime next year. There are a few risks worth flagging. First of all, we are seeing more condo investors listing their units for sale. Cash flows are impaired due to rising interest rates and the inability to pass through rent increases due to tenancy laws. I'm also concerned about the pre-sale market, where there will be a cohort of buyers who will not qualify for mortgages when their pre-sale units come due for completion. Remember, most pre-sales were purchased when mortgage rates were half of what they are today. Lastly, if interest rates remain elevated throughout 2023, then we're likely to see an increase in court-ordered sales. I must emphasize that none of these issues highlighted above are of concern today, but there are real risks that could materialize in the year ahead. Prices are still inching lower, albeit at a slower pace. We cleared out many of the panic sellers earlier this summer when some people were caught offside having bought before they sold. For the first time since February, median sales prices were up on a month-over-month basis across all product types. However, I think that's mostly noise and not something that signals a change in the market conditions. Benchmark home prices are still up 2% year over year, but those will slide into contraction in the months ahead. While it might sound hard to believe, not everyone is levered to the eyeballs in debt. There are a surprising number of mortgage-free homeowners in Canada and in Vancouver. These are the would-be sellers that are opting to sit tight and wait for conditions to improve. And so right now we have a tug of war. Both buyers and sellers are not happy with the current market conditions. I think we will get more clarity on how this plays out once the spring market rolls around in 2023. I've highlighted the risks, and I think there is a decent probability that some of those risks will surface in the new year. Again, this largely hinges on the course of inflation and interest rates, which we are all watching with bated breath. So be careful out there. And hey, if you want to search for homes in Vancouver or any area in BC, in the Lower Mainland, go to vancouverrealestatetoday.ca. My website is phenomenal. It's one of the best in Vancouver, and I'm sure you will be able to find something that appeals to you there. You can even just use it to track the market and pricing and see what is happening on the ground with those prices. vancouverrealestatetoday.ca. I'm Josh Kepke with McDonald Realty. Be sure to follow me on Instagram. Subscribe to this YouTube channel if you want more market updates and great tours of properties around the Lower Mainland, and especially in Vancouver, Burnaby, and North Vancouver. I will see you next month for another roundup of the month that was in Greater Vancouver real estate. Have a great rest of your day. Thanks for watching.